Welcome back, everyone. This is Decope here in week 2, day 5. So this is all for educational purposes only. And, we're wrapping up mechanics of the market. So you should have a really good understanding of all the building blocks involved and the pieces of the market. And if you still don't understand something, reach out to me at info@theinflectionpt, and me or someone from my team will respond to you and answer any questions about mechanics of the market. So we're in day 5, and this is execution that we're going to be talking about today. So we talked about currencies and commodities, and then the time frames and cycles and even seasonality. And yesterday we talked about price and volume and how that's a huge part of the market as well. And today we're going to really focus on the execution of these trades. So execution is everything. It's where 90% of the people make the errors. So this is a really, really important day, and you don't want to miss any of these things that I'm about to point out. So I'm just gonna talk for a second about high frequency trading, just so you know what it is, and you're not like shocked at some of the things that you see on the intraday movements, because a lot of that can be attributed to the high frequency trading. And then I'm going to talk about brokers and the broker that I use and that I recommend to almost everyone. If I don't know your situation, then I can't say what broker is going to be best for you. So, knowing nothing about you, I would just, blindly say, go to this one broker, and I'm gonna describe why, and then I'm gonna talk about the inflection point, which is actually a mathematical term. And a lot of people, if you don't know what this is, you may be wondering what it is. So that's why I'm going to touch on it, and it's pretty important to know, and maybe it can make you a lot of money as well. And then I'm going to talk about why the inflection point works, and I don't mean just the point itself. I mean this entire idea. Like, why does this entire idea work? And then I'm going to get into the action item for today, which is how to trade in a trade simulator. So when I first started out, I had no idea that there was even such a thing. In fact, when it was introduced to me, I definitely blew it off and didn't think that it would help me at all. And shame on me, because I'm putting a lot of faith in that this is the answer. This is the way to do it, because this takes all the emotions out of the trading, which can be really confusing and very distracting. And so if we just remove all the emotions, we're left with the raw data, and we can make educated decisions on what we think is going to be worth more in the future, which is the entire name of the game. So when I first, thought about these simulated markets, I didn't realize that, it's called a simulated market, but it's simulating the actual market. So I didn't even get that part, that it's the same market. So I'm just trying to let you know more about the simulator before we get into it. So these are the exact prices in the market. It's just that when you go and make a trade, it's not an actual live order. It's not being placed on the board. You're getting filled at whatever the market price is, and your account balance is going to reflect the price movement, the actual price movement of that underlying security. So when I heard trade simulator, I immediately thought that the movements were random, and I didn't even understand that they're reflecting the exact market. So it's not really a simulated market. It is the actual market, but it's not real money, which makes it that's the simulated part, is that it's fake money. So I just wanted to get that point across before we get into it. So high frequency trading is on the rise. It looks like it's based out pretty well in the last few years, at least 2016 to 2014. This was the most recent data I could find, so I'm sure it's right around there. But you can see it spiked in 2009. So that's pretty interesting that that high frequency trading really picked up in those years, and that's that's due to volatility. But there's so many factors at work here, and this is just another thing to look out for. So this high frequency trading could cause rapid movements really quickly, and you may be caught off guard if you don't know about like how the market works. There's high frequency trading, and they're computer algorithms that buy and sell based on price action. So that's really all you need to know about high frequency trading, just what it is and what to look out for. So here's a chart of Amazon, and right where I have circled, there is a little pin down, and we're gonna talk all about trading based off moving averages and things. But so what this candle looked like in that intra period, you would have seen this on the chart, and seeing this, you might panic sell, because that looks like a top right there. And we're always looking for signs of a top, but one candle by itself is not telling of a trend. So a trend is 4 candles or more. That's you don't even really gain confidence until you have at least 4 or 5 candles that you're looking at. But so in the moment, that looked like a big red candle, but really by the end of that intra-period movement, the price had already been bought up. And is that high frequency trading? No one can say for certain, but so I asked the question, is it high frequency trading? Is it strong bids? Is it people coming to scoop up these low intra-period prices, these intra 15-minute period prices? This is the 15-minute chart that we're looking at. I should have started with that, but this is the 15-minute chart. So that period was 15 minutes, and the price dipped pretty far down, way past what it looks like support on the chart, and then it sprung right back up. So the Jeff Bezos, that's kind of a joke, but obviously he's the founder, so it absolutely could have been him as well. And that's important to realize, that one person can be the reason for a major move in the market. But there's a lot of things that it could be. So just wanted to bring that to your attention as well. So some of you need a broker to actually make the transactions. And that hopefully that you knew that already. Now you just may not know what broker you want to align with. And it is per your situation. So if you have 10,000 or more, you can open up an Interactive Brokers account. I believe they do have student intro rates where you can open an account with like a few $1,000s. But I'm not. I think that may be just for students and younger people. So they have a platform, and it's TradeStation, and it's a good platform. I don't use the platform very much at all. I actually think the Thinkorswim platform that TD Ameritrade has is a better platform. But I myself am aligned with Interactive Brokers, and for reasons that I'm going to get into right now. There's also Robinhood, which is an app. So you download it on your phone, and it's free trading. They make their money on the pricing of the trades. So you're going to get filled like a penny or two higher than the market prices probably, but that's fine as long as you have a good strategy. So you need one of these to be able to buy and sell stocks. So when you place an order on any site, the entire world sees your order. So that one order could cause a chain reaction in prices. It could be you that starts the price a certain way, and not everyone realizes that either. So you don't want to be that outlier. You want to have a good strategy for placing your trades, and we're going to get all into that in the execution week. So just table that for now. So why am I choosing to align with Interactive Brokers? And it's basically for the reason that I get the best pricing on shares. And Interactive Brokers also has this information right on their website that I pulled from their website. It's important to know that I got this information from their website. So they're obviously trying to find data that supports them being the best broker. But I think, it seems pretty significant to me. If you're an occasional trader, it's the lowest out of any broker. And if you're a frequent trader, then it's the lowest as well. So it seems like whether you're trading a lot or a little, Interactive Brokers is the way to go. Just know that that's the one that I'm personally aligned with. So that's what you're going to hear from me. Now we're going to talk about the inflection point and what it is. It's more than my company. It's an idea. It's a mathematical term as well. So think about it as accelerating in a car. So if you come up on a red light, you have to decelerate. Now I'm talking about acceleration because these are derivatives that we're talking about here. We don't care we don't care about the price. We care about the difference between the price in the future and the price now. So they're derivatives because they're based on something else. So the acceleration is based on the speed, and the momentum of a price is based on the price. So if you see a red light, you have to decelerate before you can stop. So this is my analogy because it's a lot easier for people to understand rather than, telling them just to look at a chart. It doesn't really make any sense. You want to understand the physics behind it because it's a science. And when you understand the science of the market, you'll be unstoppable because you'll have complete confidence in your strategy and you won't even be worried at all. You'll know that, that there may be a few times when something falls apart, but for the most part, you're going to be making money. So you're in a car, you're decelerating to a stop, and then you get the green light, and your acceleration picks up again. So you really want to be thinking of this momentum in the market because there is a physics to it, and there's always multiple forces at work, but your knowledge of physics and momentum coupled with your knowledge of the building blocks in the market and all the mechanics in the market is going to make you a real asset. So let's get to why does the inflection point work so well? Well, the inflection point is sort of where trading meets investing, and this is my opinion. The price, when you see an inflection point, the price doesn't matter. Sort of how, as long as you're accelerating, you're going to get to where you're going faster. So time is also relatively unimportant when you see the inflection point because you know what's to come. You can see a few moves ahead, and that's your whole strategy there, is that you can see a few moves ahead, and that's more than most people can see. So the majority of people don't know, or they don't care, or they just can't execute. This sums up 99.9% of people. They don't know, they don't care, or they can't do it. So you have a huge advantage if you can spot this chart pattern and you can combine it with what you know about the market, how the market works. So when I say strategy, this is the strategy. So it's very, very important stuff here, and that's how the inflection point will look on a chart. And you would buy in on that confirmatory upward movement after the momentum slowed and is now picking up again. And I tried to find a good chart, and this is a 15-minute chart, but it honestly doesn't matter. It could be a daily chart. The inflection point, when you see that consolidation of prices and then a break out of that level, that's a really good confirmation. Of course, everything is situational, so don't forget that. And on that chart, that candle would have been the confirmation for that big move up. So before we try and execute, we want to first know how to do it, and we learn how to do it in a simulated market. There's no point in risking real money if you don't even know what you're doing yet. So let's get down the execution part, just buying and selling. It doesn't matter, we're not even trying to look for good setups. We just want to know how you do it. And I go through the TD Ameritrade Thinkorswim platform because you get a free 60 days. You don't need any money to open an account. You just sign up and you get a free 60 days in the simulated market. And I made a mini crash course on how to trade in a simulated market. So the action item for today is to opt into the mini crash course on how to trade in a simulated market. And this is right on the homepage, theinflectionpt.com. So, you shouldn't miss this, and this is really, really important. So don't skip this step and opt in to this mini crash course and watch the videos. That's if you need to motivate yourself somehow, have a piece of chocolate cake waiting for you after you complete the simulated market, if that's your thing. So any way you can get yourself to opt into this, please do it. It will help you tremendously in understanding how to actually execute in the market. And even if you're a seasoned trader, I encourage you to opt in as well. So that's it for today, and I will see everyone next week.